Well, welcome back to Skyharbour Resources, a channel holding extensive portfolio of uranium exploration projects in Canada's Athabascan Basin during this incredible boom in AI infrastructure and just utility build out to power these cloud and AI data centers. We're very privileged to be joined by Jordan Trimble, the CEO, to kind of take us through some recent news as they expand their projects in uranium. First and foremost, welcome, sir.
Thanks for having me. Looking forward to catching up.
Yeah, always a pleasure. And it's been a little while since I got you on, but maybe we'll just, hit it with the big headline here. Skyharbour entered into basically a major strategic agreement with Denison Mines to form four new joint ventures at the Russell Lake, combined project considerations of up to 61.5 million. Now that's just the headline, but maybe take us through the exactly what's going on with this.
Sure. So it's a major transaction, transformative transaction for Skyharbour. We've been working on it for a little while now. It's somewhat complex, so I'll try my best to distill it down to the kind of key talking points. But you pointed out the combined project consideration totals to 61.5 million. So what that means is Denison, in order to complete the earn-in at the project, and it's actually, as I mentioned, broken into four different sub-properties, but the total earn-in, as well as the upfront payment, those amounts total to 61.5 million. 40 million of that is in exploration funding coming from Denison. So they have to put up over the next 7 years, right? $40 million. It works out to, on average, just under $6 million a year in exploration funding. And to give your viewers and audience a sense of what that gets us and what that is relative to what we've spent to the project, we've typically spent between 3.5 to 4.5 million in exploration annually at the project. So just that there alone is a meaningful increase to the exploration budgets going forward at the property. And now that's just on two of the four sub properties. So if we look at each one of those individually, we'll break them down. So the first one is a property called Wheeler North, where Denison initially has bought a 49% interest in the project. We retain that 51% interest. Denison can earn up to 70% over the next 7 years by spending 25 million in exploration in expenditures, funding the work there, as well as paying Skyharbour an additional 3.5 million in cash. Okay. Now, before I get onto the details of the other ones, the 40 million combined project expenditures. That's in addition to cash and share payments that total potentially to 21.5 million. 18 of that 21.5 million is an upfront cash and share payment from Denison to Skyharbour. We'll use 10 of that 18 to pay Rio, so buy Rio out of their minority interest. And then we keep 8 million of that, and we'll receive this by year end. That 8 million fully funds us for all of our hard dollar needs right through next year into 2027. It'll help pay for some of our exploration that we're funding. It's a major financial commitment from Denison to basically shore up the JV. And then ultimately at that point, they will enter into these two option agreements that require that they spend another 40 million in on the properties, as well as another 3.5 million in cash payments to Skyharbour. So I mentioned Wheeler North. That's all the claims surrounding Denison's Wheeler River project. One of the main reasons that Denison has put the big stamp of approval on this project and that we've entered into this transaction with them is the strategic location of Russell. It's basically all of the ground around the Denison's Wheeler River project. Denison's a multi-billion-dollar, $3+ billion uranium mining and development company, and they are building what will be the next newest producing uranium mine in Canada at the Wheeler River project, the Phoenix deposit. Phoenix deposit is just a few kilometers from our property boundary with Russell. And in fact, Russell and Wheeler share a 55-kilometer long border. And so needless to say, it makes a lot of sense for Denison to have an interest in this project. So Wheeler North, that'll be where the bulk, the majority of the exploration expenditures that Denison's putting up will go to. There's another property called Getty East, which would require Denison to spend 15 million over a 7-year period. And at that point, they would go from this initial 30% JV interest that they have. We have 70% and we're operator. They would then go to, it would basically flip. They would be 70%. We would have a 30% interest. And then, excitingly for us and our shareholders, we still retain the vast majority of the claims at the Russell Lake project, an 80% interest in those claims, with Denison as the 20% minority holder. We're renaming these claims the RL project, and if you look on a map, it represents over 70% of the original property area. So we can continue exploring as operator and 80% owner at these claims. There's lots of good targets at them, and Denison's actually required in the first few years to fund their pro rata minority interest 20% within those in those budgets and in those programs. So we're basically, what you have here is Rio Tinto. We acquired the project from Rio Tinto. We had a JV with them whereby we were a 58% owner, they were 42%. So we're effectively buying them out. Denison's coming in to form initial joint ventures at 4 different property areas within the broader Russell Lake project. And then Denison has 2 option earn-ins to increase their ownership in those 2 specific sub properties. So we're bringing in an active funding partner that, again, is building a mine nearby. There's lots of synergies between our 2 teams. It's important to note that Denison, we have a long-standing relationship with Denison. They've been a large corporate shareholder of Skyharbour's for many years now. Their president and CEO, Dave Cates, is a director of Skyharbour. So we already have that comfort working with each other. But now we will be able to let our technical teams, our geological teams, work together collaboratively to advance this project. The bottom line here with this transaction, it shores up a whole bunch of exploration expenditures and funding over the coming years by a much larger company. It allows us to also work at the project, at the claims that we retain, that we're keeping a majority stake in and operatorship of. And it really is, we believe, the mechanism for us and our shareholders to have unlocked, very quickly unlock as much value at this project without a whole lot of equity dilution within the next few years. We see this as the mechanism whereby in the next year or 2, we can advance the project through the discovery process into a resource delineation stage, unlocking a whole bunch of value, re-rating the company higher without having to go and dilute significantly, and utilizing and working with really the best partner company we could seek in Denison Mines.
Yeah, and there's a lot to encapsulate there, but I mean, just kind of looking forward, what should investors be paying attention to? I know uranium's trading at still like really great levels. If you can give some insight into the uranium prices or anything you think investors should really hone in on in the value proposition behind Skyharbour.
Well, just getting back to Russell, so now with this transaction announced, this sets the stage for what will be, a very aggressive year of drilling and exploration at Russell, both funded by Denison at the Wheeler North and the Getty East claims, as well as by Skyharbour at the RL claims. So it will likely see the most amount of drilling ever carried out at the project collectively between Denison and Skyharbour, again, as we both work to advance the project, to make new discoveries. It's a big property. It needed to be divided up into more manageable sub-properties, and we've done just that, bringing in an excellent strategic partner to help us advance the project going forward. So keep an eye out for news flow on plans for 2026. We still have assays pending as well. This is a near-term catalyst between now and year-end, and likely early into the new year. We've got drilling from this year at both Russell and our adjacent co-flagship 100% owned Moore Lake project. It's important to note that we own 100% of Moore Lake. It too is an advanced stage exploration asset, a large property adjacent to the east of Russell. We've carried out a fair bit of drilling and work there at Moore Lake, in addition to the work that we've been doing at Russell. That project has very high-grade drill results, numbers as high as 21% U3O8, uranium over 1.5 meters. Just earlier this year in the summer, we announced a big 40-meter step-out hole that intersected almost 5% U3O8 over 1.5 meters, a very, very substantial and meaningful hole as far as proving up a resource at the project. At Moore Lake, there is There are several high-grade zones of mineralization that combine to host what's called the Maverick deposit. We're looking to add pounds to that to those zones of mineralization over the coming years. And this deal at Russell will allow us to do just that and to bring in some more money to help with that. We are planning additional drilling at Moore Lake next year, in addition to the drilling that we're doing at the RL claims at the broader Russell Lake project. So collectively, between us and Denison at both Russell and Moore, it's going to be a lot of drilling. So news will come on the specific plans for all of that drilling. And we do have, much like at Russell, we have assays pending from some drilling that we've just wrapped up at Moore Lake. So assays pending from Russell and Moore, plans for 2026, a very, very exciting year ahead now with this transaction announced with Denison. But we also have our prospect generator business. So 9 other partner companies advancing 13 of our 37 projects. Again, we're one of the largest mineral tenure holders in the region with over 1.5 million acres across 37 projects. So 9 partner companies advancing 13 of those, spending over 70 million in combined project consideration, assuming they complete the earnings. When you layer in now Denison's the agreement that we have with Denison, that brings that 70 million total up to over 118 million total in combined project consideration. Again, that's cash share payments as well as exploration funding from partner companies, substantially more than our current market cap. And that's just the prospect generator business, the prospect generator part of our business. So a lot of news flow. As far as the uranium market goes, I think a lot of investors are kind of fixated, if you will, on the spot price, which has kind of been bouncing around. However, the long-term price has been moving higher. We've seen it tick into the mid 80s now on relatively low volumes this year, which is quite interesting. I mean, usually when you see lower volumes in a market, you can see the price move downwards. We've seen the opposite happen here now with the long-term contract market for uranium, which is quite exciting. I think next year is going to be one of the biggest years for this commodity. We've consolidated here in this, call it $70 to $80, $85 price range for the metal. And now with the, I think, pickup in contracting volumes that we'll see next year, utilities have only been their replacement rate contracting. They've only been contracting about 45% of the necessary replacement rate over the last 12 years. So that needs to ramp up. So we'll see the volumes pick up there. That should help move the price higher. And as you mentioned, we have this new demand coming in from AI, from the data centers, just the electrification that we're seeing globally. And if you look at the WNA, the World Nuclear Association, in 2019, their projected demand forecasts out to 2040, it's actually increased by almost 50%. So as of this year, their new demand projections through to 2040, it's up almost 50% from just 6 years ago. So a very exciting time for the commodity and investors in the space. We at Skyharbour, we're building a one-stop shop for high-grade uranium exploration and discovery potential in the basin, coupled with prospect generation. And now we have notable larger strategic partners in Denison Mines, Orano, we have a JV partnership with at our Preston project. They've done some great work there this year. And Rio Tinto remains a large shareholder, and they will keep a small NSR on the Russell project as well.
Truly incredible. And I appreciate all the insight today as we pass it off to the viewers. As always, we'd love to know what you think in that comment section, and consider subscribing for news and catalysts as it comes down the wire like this. Of course, we'll bring it to you here. But on that, as always, we look forward to catching you in the next one.